Hello and good morning, no, good afternoon. Welcome to the look ahead for tomorrow, Wednesday, the 28th of May, with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow, well, in fact, overnight, we've got the interest rate decision from the RBNZ. And tomorrow, the European session is actually relatively quiet. Focus will be on the FOMC meeting minutes later in the US session. And then after the US close, we've got the all-important results from Nvidia. So just kicking off with Nvidia, actually. So we've got earnings to be released after the close. Obviously, the numbers, guidance are going to be very much in focus, but also what the export restrictions to China are meaning for this firm. EPS is expected to be at 68 cents per share. That's up from 27 cents per share a year earlier. And this is on revenue of 43.3 billion, which is up 66% from a year earlier. Data centers revenue is expected to remain a key driver. Then just what else we're watching for? I think the other thing we're going to be watching out for is what this impact is as far as US restrictions on exports, particularly the H20 chip to China, and any uncertainty related to China and future sales. We're expecting to hear something around a $5.5 billion charge there. However, there have been some updates, or more positive updates, that we've had recently, and that's regarding Trump's trip to the Middle East, where Nvidia demand is expected to pick up substantially, particularly with deals from the Saudi Arabia and UAE. So the impact, the focus is going to be on whether those deals can really plug that uncertainty and that difference with the gap that we're expecting from China. Now, these results come as the share price. Just bear with me. We're looking at the wrong. We're looking at Nvidia here. The share price is trading at a 2-month high. So we've taken a move back above that 200 SMA. We've extended that rally from the 87 low that we saw in April. If we get some encouraging data, some encouraging results from Nvidia, it might just help to spark some life back into the AI trade, which has very much taken sort of, a backseat to the Trump trade tariffs, US fiscal health concerns that have been very much dominating the market in recent weeks. So upbeat numbers, we'll be looking at upbeat guidance. Then we will be looking for a rise above this 136 level. That's going to open the door to over here, which is that 143.40 level, which was the February high. And then if we get above that, then we'll be eyeing the 152 record level. Just watching out here, RSI, it's come out of overbought territory as we've had this sort of consolidation pattern, but we're not too far away from overbought territory, so just be wary. On the downside, any disappointment, looking out for 126 here. That's the 200 SMA on the downside. If we get a break below there, then obviously we've got this sort of support zone here, which is the 100 SMA at 122, and also that 120 level, which is that falling trend line dating back to the all-time high back in January. So what else are we going to be looking for? Well, just going to bring up the NASDAQ here as well. NASDAQ's not looking too dissimilar. We've seen this recovery from the lows of the 16,325. That was the April lows. Watching out not only Nvidia, obviously Nvidia has the potential to drive the broader market, but also we've got those FOMC meeting minutes. Now, the Federal Reserve left rates unchanged in that meeting. And we still sort of had that very much the sense of the Federal Reserve remaining patient in order to see the impact of Trump's trade tariffs on the US economy before looking to move again on rates. And this has been sort of a rhetoric which has been very much repeated by Fed officials. So there is a potential that the FOMC minutes won't necessarily be adding too much to the picture and could be considered a little bit stale, given that we've heard from Fed speakers since. On the upside, if we do get sort of nothing new and we get upbeat Nvidia's results, then we'll be looking to take out the 21,465. That's the high that we saw in May. That's going to bring into play the 22,245 level, which is the all-time high. So not that far off it. Just as far as support is concerned, on the downside, key level here around the 20,425. That's the confluence of the 200 and the 50 SMA. But before that, I guess we've got a level here around the 20,600. We can see that's sort of a level that's been capping across the year and the end of last year. And then just finally, this is the chart that I had at the beginning. New Zealand dollar, US dollar, because we've also got the RBNZ rate decision. Expectations are for a 25 basis point rate cut, although some market participants are considering that the RBNZ could cut by 50 basis points. Basically, if we have a look what's going on in the economy here, we've got inflation, which was a little bit hotter than expected in Q1, but still within a reasonable range. We're seeing growth slow, unemployment remains at 5.1%, and wage growth has slowed as well. So, there is no reason really for interest rates to be restrictive at this time. 25 basis point cut, I believe, is coming. That's pretty much priced in. What we'll be looking out for potentially more is the outlook, the updated forecasts, which could change modestly. I don't expect there to be too much change here, and as a result of modest changes to forecasts and inline 25 basis point cut, then we could see that actually the meeting has little impact on New Zealand dollar, US dollar, which is trading actually between this range that it's been sort of trading in since April, capped on the upside by the 60.40 level, capped on the downside by the 58.50 level. We're above the 200 SMA. If we do have sort of like a more dovish sounding RBNZ, then that's the level I'll be watching out for on the downside. That's at 58.85. And below that, that's going to bring this level in here, which is the 58.50 level. Move below here, really could see sellers starting to gain some traction to lower levels. If we find that they're a little bit more hawkish, which does seem unlikely given that the global outlook is so uncertain, then we might see this level tested on the upside at 60.40. That's the level that needs to be broken above in order to create a higher high. So I hope that you've liked this video, and if you have, then please do give the video a like, and for more videos like this, then please do subscribe.